Welcome to your first investment vehicle. Allow me to introduce gold and silver, the precious metals investment. You might be wondering, why gold? Why silver? Why not jade, ruby, or diamond? Let me show you a scenario. 25 years ago, you could get up to 3 pounds of bread for $1. Now you can't even get 1 pound of bread for $1. Now, what is happening here? Has the price of bread gone up? Could it be that the value of money has gone down? What does this have to do with gold and silver investments, you ask? Because while all this is happening, gold and silver are increasing in value. How? Gold and silver are invested by many because of its value, source, mining processes, and even its relationship with fiat currency, the legal tender that has its value backed by the government that issued it. These are some of the many items that contribute to their prices today and tomorrow. Here's a mini checklist to get you started. You'll need to remember that this is a long-term investment that will ensure a stable wealth for you. To invest in gold and silver, you need a dedicated resolve and a budget from as low as $18 to as high as $500,000. Time to meet gold. There is a question about gold that goes, what makes the shiny metal so precious that it has started wars and ruined dynasties? Well, the answer lies in the unparalleled features. Some of the prominent values of gold are its durability, it's virtually indestructible, it is scarce, ductile, and is simply beautiful. Despite its physical and aesthetic features, allow me to share you another important factor of what pushes the value of gold. Its source. The most apparent source is through gold mining activities. One of the only known ways to produce gold is to mine it. It is not possible to produce pure gold in a laboratory or by printing press. Hence, the supply of gold depends solely through mining. Studies show that gold deposits are rapidly depleting over the last 40 years. It is now harder to find new gold deposits. So those who wish to preserve their wealth, investing in gold is the perfect value-retaining purpose. Furthermore, gold production requires a tremendous amount of cost and effort for it to be refined and sold to end users. Did you know the average cost of producing 1 ounce of gold is up to $3,000? That is already an indication on the price of gold per ounce. The second source of gold is known as recycled or scrap gold. Research stated roughly 35% of our gold comes from this method. Remember how gold is virtually indestructible? It means gold can be reused in so many different shapes and sizes. What's more, the higher the prices of gold, the more recycled gold will be supplied. Here's a quote from a study. All the gold that has ever been mined is still in existence today and can be found in near-perfect state in one form or another, like jewelry or gold wafers and others. The amount of gold collected from our electronic devices, for instance, are included in this source. This ability of being recycled and reused numerous times retain the intrinsic value of gold. This is where things get interesting about gold. In this module, The Boons of Gold Investment, we will be covering the main reasons as to why you should invest in gold. The great merit of gold is precisely that it is scarce, that its quantity is limited by nature, that it is costly to discover, to mine, and to process, and that it cannot be created by political fiat or caprice. The above saying declares how gold is considered extremely valuable in the financial realm. Thus, research shows that there are 3 main reasons as to why you should invest in gold. The famous reason that transcends over time is that gold is against inflation. Economists inform us that inflation occurs when there's too much money being printed out to chase over very few goods. The increase of prices causes reduction in the value of money. Studies show that within the year of 1973 until 2009, the price of gold increased from $106.72 per ounce to $1,028.50 per ounce. That is a huge rise of 928%. Note how the value of gold is rising despite the fall of money. How is this happening? You see, money is capable of being printed out by the officials or governments. There is no hint of scarceness to it. This will cause a flood of liquidity into the financial standards. However, gold's physical properties can push a stronger price appreciation in times of inflation. This inevitably offsets the negative impact of a rise in Consumer Price Index, or the CPI. Analysts are predicting that gold prices may double to around $2,000 per ounce should hyperinflation occur. When it happens, gold may be the only solution if you truly want to preserve your wealth. That is why gold is the true hedge against inflation. In Part 2, we share more reasons why to invest in gold. Secondly, gold appreciates over time. Remember how gold is indestructible and there's practically no wastage of gold that is taking place? Ask yourself, ever heard of anyone throwing away their gold? Not me. Most of the gold around us, such as jewelry or coins, are either sitting in reserves of central banks or in your neighbor's vault. The gold mining industries have failed to meet the demands of gold. The number of jewelry and gold investors are rising more and more. The depleting gold deposits supply pushes a significant rise in the price of gold. It forces gold to play the stabilization role of one's wealth. It is not affected by financial policies of any countries, unlike money. It is only influenced by the supply and demand of the world. During Diwali season, for example, there will be a noticeable increase in the demand for gold in India. You will see an increase of its demand and prices during that quarter of the year. Finally, gold is your financial guardian. Previously, you were told how gold basically has no default risk. Smart investors are aware that gold has intrinsic value and is a store of value by itself. Therefore, any forms of other cash-related investments, such as cash funds, went to gold. This act pushes the price of gold into another consecutive rise. Studies show that during the Mexican crisis in 1995, gold gained a rise of 107% in less than 3 months. Such is the case during the Russian ruble crisis in 1998. It caused a major rise in gold prices by 307% in 8 months. That is why most investors seek gold. Gold is becoming their insurance against failing economics, overspending governments, and their financial instability. Additionally, the beautiful part about gold lies in its neutrality. Studies show how gold is not positively or negatively correlated with other assets. This makes the correlation between gold and other assets practically of no consequence. Now that you have come to terms with the benefits of gold, let us explore the types of gold available for you to begin your investment. There are 2 types of gold investment available: physical gold and paper gold. Physical gold are gold investments that let you keep your actual gold, whilst paper gold does not. Physical gold investments are through gold coins and gold bars investment. Let us explore the physical gold investment. Firstly, gold coins. It is one of the most convenient and portable forms of gold available. There are multiple choices of gold coins available for your taking. However, you are recommended to buy only international hallmark coins with 99.99% purity of gold. Hallmark labeled gold coins are instantly recognizable and liquid around the world for their gold content uniformity. Some of the most widely traded Hallmark gold coins across the globe are the U.S. Gold Eagle, U.S. American Buffalo, South African Krugerrand, and Canadian Maple Leaf. Colorized gold coins such as the colorized Australian Gold Monkey coin and colorized gold lunar year of the rooster are available as well. The price of an ounce of gold coin is U.S. dollars 1,322.82 as at the time of the period of my research. Each of these coins should contain 1 troy ounce of actual gold content, but since pure gold is slightly soft, some of them weigh just over an ounce. Hence, some of the coins, a small amount of alloy is added to make it sturdier. Where should you look for gold coins? Most gold coins are available at any distinguished jewelry shops near you. Be sure to look them up online if they have their own websites. Next is the bank. Most banks will offer gold coins if certified hallmark stated previously. There's also the gold bullion dealers. These dealers are available online and in the land market. However, it is imperative for you to certify their reliability and reputation beforehand. Moving on to the types of gold investments available. Another physical gold investment is through gold bars. Let us take a closer look at gold bars. It comes in a variety of shapes and sizes. What's more, buying gold bars in bulk saves a lot of money compared to gold coins. It is also available in multiple weight, from 1 ounce to 100 and 400 troy ounces. There are two kinds of gold bars, cast bars and minted bars. Cast bars are basically molded bars. Gold metal is heated until it turns into a liquid. This gold will then be poured into molds of varying size and weights. A cast bar retains its originality because no two molded bars are the same due to the abnormalities it will get once it's liquidated. It is also inexpensive because it requires minimal processing to mold one. However, a cast bar lacks appeal due to its minimalist and rough design. On the other hand, a minted bar is originally a cast bar that has been polished, cleaned, and dried. A minted bar contains intricate details on them, and it is valued amongst investors. Its popularity will secure sellers and ensures profit to your investment. However, minted bars contain premium, thus contributing to its expensive price. Plus, most minted bars are contained in their own package. Opening them may devalue their worth. Regardless of your choice, it is necessary that you buy gold bars from recognized hallmark with 99.99% purity of gold. The recommended gold bars are Australian Perth Mint, Pamp Suisse, Credit Suisse, and Johnson Matthey. Here is the list of prices for cast bar and a mint bar at my period of research. A cast bar costs around $1,274.25 per troy ounce, while a minted bar costs approximately $1,293.20 per troy ounce. Like gold coins, there are multiple certified places you can visit to purchase your very own gold bars: jewelry shops, banks, and gold bullion dealers. In this part, we will be talking about paper gold investment. In this section, we will only be covering one of the most sought-after paper gold investment, the gold ETFs. The main key point of this investment is that you are not required to own the physical gold, only contracts. So what is it? Let us recap for a while. Previously, you've learned how investing in business means that you do not actually own the product or services of the invested business. Thus, one way to redeem the fruits of your investment is through cash, not the product or services of the business. Paper gold investments work in a similar way. Let us take a closer look at gold ETFs. Despite the productive rise of the asset, the goal of ETF is to simply track its rise and never to surpass it. You are buying a form of commodity, a contract that encapsulated around gold. It is an investment designed only to track and reflect the price of gold. So, how is it beneficial? Remember how gold is against inflation? So, if one of your investments is affected by the dollar's downside, purchasing of gold ETF may aid you to hedge that loss. Plus, it is one of the easier ways to make an investment in the gold mining industry if you are interested. The downside of gold ETFs, however, if you seek to own a gold asset, you cannot do so using gold ETFs. You will not receive the gold itself for your funds, only cash. Some of the most popular gold ETFs available is the SPDR Gold Shares and iShares Gold Trust. SPDR Gold Shares has up to 9,800,000 shares with a low expense ratio of 0.040%. iShares Gold Trust has up to 8,900,000 shares with a low expense ratio of 0.25%. However, you are recommended to invest only on the physical gold rather than paper gold. Paper gold investment requires additional understanding in stocks and funds. Although it is part of gold and silver investment, its true nature belongs to the world of the stock market. If you do not have this ability, refrain from investing in paper gold. This is because gold ETFs hold a lot of questionable assumptions over their gains, and this would pose many risks on integrity. Time for you to meet silver. And just like gold, silver wouldn't be one of the precious metals around without its flexible characteristics and its hyped origin. Despite the undervalued appreciation silver receives, in reality, silver is more versatile in terms of its usage to variety of industrial and commercial applications usage, unlike gold. Research shows that silver remains the best electrical conductor known to man. It is among the most malleable and ductile of all metals. Excellent thermal conductor. Also, it has the highest light reflectivity and sensitivity. That explains what makes up a solar panel. For the past 30 years, the world forces have pushed silver mining production to a tremendous rise that could no longer sustain the demands of the world. 90% of the world's pure silver mining industries have already experienced bankruptcies. Studies show that unlike gold, currently 80% of the silver is a byproduct of different base metals, such as copper, lead, and zinc. Many pure silver mining producers are discouraged to increase their supply output for the fear of pure silver's depletion. So they turn to differing sources of metal instead, copper, lead, and zinc. This is one of the only ways to sustain the demand of silver. Silver production is now dependent on the mining production of other metals. How does this appreciate silver? The world is running out of pure silver. Hence, silver is ideally more valuable than gold. Why would you need to consider investing in silver if you already have gold? In this module, the perks of silver investment will unravel your interest in silver. The demands of the industry put silver at the top of the metal demand chain. Studies show that the demands on silver are increasing throughout the years, especially in the Asian markets. China ranked one of the major users of silver. Its increment is due to the positive demand in the various fields of industry. It is highly apparent in the technology business. The demands for electronic devices like iPhones, Samsung, HTC, for example, is one of the main reasons why silver is constantly being sought after. We rely so much on our mobile phones, ovens, and refrigerators. It causes hundreds of patented applications for silver demand product every single week. Yes, indeed, silver is the main constitution in charge of your electronic handheld devices. The rise of technological pursuits is draining the silver stock. It is no surprise to you by now that silver is getting scarcer each year. This situation is like gold, hence its rarity prevails. Did you know that the demands for silver already surpassed its supply for over 30 years now? The gap between its supply and demand are getting wider, leaving a little amount of silver left for gain. In other words, even though silver is regarded as industrial metal, smart investors look at silver as an opportunity. They know that for a fact silver is rarer and more important than hoarded gold. Research indicated that during the 1950s, silver could satisfy 100 months of global demand at that time. But after 55 years, the number of months of demands it could satisfy is less than 6 months. That is quite a demand. Let us explore the types of silver investment available to you out there. Just like gold, there are two types of silver investment: physical silver and paper silver. When it comes to physical silver, of course, you could hold on to the physical silver itself, but not paper silver. Physical silver investment are determined by the amount of silver coins and silver bars that you possess. Moving on towards physical silver, one of the smaller and common form of investment is silver coins. They don't require much assaying, hence making it one of the most convenient and mobile forms of silver investment available. A variety of silver coins are available for investing. However, you are recommended to buy only from international hallmark coins with 99.99% purity of silver. They are, of course, instantly recognizable and liquid around the world. Some of the widely invested silver coins around the world are the U.S. Silver Eagle, Canadian maple leaf, and the Australian Perth mint, to name a few. There are multiple series to the Australian Perth mint silver coins, such as the Koala and Lunar series. Colorized silver coins, such as the British Silver Britannia, and even Canadian proof silver Batman vs. Superman are available in the market as well. The price of an ounce of silver coin is $18.25, as at my period of research. Each of these coins will contain 1 troy ounce of silver content. Where can you look for silver coins? Most silver coins are available at any distinguished jewelry shops around you. If you come across their website or contact details, it will be best to look them up before you shop. Next is the bank. Most banks will offer silver coins of certified hallmark. Finally, we have the silver bullion dealers. They are available online and at physical market as well. However, remember to do a little research to ensure their credibility and reliability beforehand. Moving on to the types of silver investment available. Another physical silver investment available is through silver bars. Silver bars come in multiple shapes and sizes. Additionally, buying silver bars in bulk saves more money compared to buying gold coins in bulk. What's more, it is also available in multiple weight, from 1 troy ounce, 10 troy ounce, 100 troy ounces, and even 1,000 troy ounces. Although 1,000 troy ounces of silver bar is a standardized size in commodity market, generally they are not suitable for a physical investment. So even if each bar is hallmarked and stamped with its weight and purity, most bars can vary by as much as 10%. Buyers at times will require them to be assayed, and they generally carry a low premium over spot compared to silver coins. There are 2 kinds of silver bars: cast bars and minted bars. Like gold, cast bars are molded bars. Metals are heated until it turns liquid and it will be poured into a mold of varying size and weights. It is also inexpensive because of its minimalist design and process. Minted silver bars, however, require extensive process to be produced. It is valued amongst investors because of the intricate details on them. However, minted bars contain premium, and some of them come along with their own unique packaging. Remember, opening them may devalue their worth. Regardless of your choice, it is necessary that you buy silver bars from recognized hallmark with 99.99% purity of silver. The recommended silver bars are Royal Canadian Mint, Johnson Matthey, Engelhard, and Perth Mint. Here is a list of prices for a silver cast bar and silver mint bar as at my period of research. A silver cast bar cost around $20.09 per troy ounce. On the other hand, a silver minted bar costs around $21.82 per troy ounce. There are multiple certified places that you can visit to purchase your very own silver bars: jewelry shops, banks, and silver bullion dealers. Moving on, let us unravel the paper silver investment. There are several paper silver investments out in the market. However, just like gold, we will only be covering one of the most sought-after paper silver investment, the silver ETFs. The primary point of this investment is that you are not required to possess the physical silver, but contracts. Instead of holding silver, investors can buy, hoard, even sell shares issued by the silver ETF, just like a mutual fund. The investor's pool of money will be used to buy physical silver and hold them in trust on behalf of silver ETF investors. Silver ETFs are a form of investment funds that trades on stock market exchange. The funds passively gain depending on the performance of assets, in this case silver. Like gold, silver ETFs are simply used to track its rise and never to surpass it. You are buying from a commodity, a contract that encapsulated around silver. It is an investment designed only to track and reflect the price of silver. One of the popular silver ETFs is the iShares Silver Trust. iShares Silver Trust has up to 700,000 shares with an expense ratio up to 0.50%. The downside of silver ETFs, however, should you seek to own a silver asset, you cannot do using silver ETFs. You will not receive the silver itself for your funds, but only cash. That is why you are recommended to invest only on the physical silver rather than the paper silver. Paper silver investments require additional understanding in the financial realm of stocks and funds. Although it is part of the precious metals investment, its true basis is in the world of stock market. If you do not have this ability, refrain from investing in paper silver. This is because silver ETFs hold a lot of questionable assumptions over their gains, and this would pose many risks of potential breach of integrity. Now, it's the time for you to begin investing. This step-by-step of how-to is designed specifically for you and customized to your investment needs to ensure that you choose the right type of investment to gain that passive income that you always wanted from gold or silver. There are 4 easy steps for you to begin your precious metals investment. That's right, only 4. Let's get started. We will begin with the first step, the I step, identification. Every passive income comes with a series of lengthy selection, but it all boils down to your need. What is it that you, not anyone else, truly need to create that wealth you desire? Knowing what you need is crucial for the identification process. Questions like, are you interested in gold or silver? Then the subsequent question to ask yourself will be, why? The answers lie with the requirements of your preferred type of investment. To understand your need, we will need to recap on what we've learned in the previous modules on gold and silver investment. This table summarizes the main aspects of both gold and silver investment that we've covered. For gold, it is renowned for its ability against inflation. It also appreciates over time and acts as your financial guardian, while silver has a constant positive demand in various fields of industry, and it is getting scarcer each year, hence securing its rarity. So in this table, we will be covering on the type of investment available for each metal. However, we will not be covering paper metal investment as part of your investment options. So physical metal investments are investments whereby investors are in possession of the physical metals, coins, and bars. Both gold and silver coins have pure metal coins and even colorized coins. They also have cast and minted bars. Cast bars are the minimalist bars compared to minted bars. Their production cost is significantly lower than minted bars, hence it has lower premiums to start with. Another thing for you to identify is where would you place your desired metal coins and bars. You can either put it in a professional vault or into your own personal vault. Some opt to put it in a professional vault because doing so will retain its full resale value, unlike the latter option. If keeping them within your personal premises means a lot of work to you, then don't. However, there is a saying about gold: if you can't hold it, you don't own it. If you are inclined towards this saying, that means you are comfortable with the metals beside you. If you do, go for it. Introducing the C step, calculate. Now it's time for you to evaluate your potential return and the cost required to do so. However, there are certain key factors that you would need to look at before you start calculating your investment price. First off is the market. There are 2 types of market price to look at: the market buying price and selling price. The market buying price is often referred to as the current purchasing price of the metal at that time. On the other hand, market selling price is the cost of the metal during the period when you decided to sell them off. Next, there are several components that affect the price, such as its premium or even the dealer's commission or markup. These metals require minting, marketing, and distributing. This cost is called premium, and it is usually just a few % over the market price. There are no tax implications for buying physical metals. Selling them, however, do have. So if you sell them for more than what you paid for, there will be a tax liability charged. It's time to calculate. For physical gold, there are gold coins and bars. The market price for gold coin is $1,322.75. $1,000.82 per ounce. For Gold Bar, the cast bar and minted bar cost around $1,274.25 and $1,293.20 per ounce, respectively. The market price for silver coin is $18.25 per ounce. For the silver bars, cast bar and minted bar, the cost is around $20.09 and $21.82 per ounce, respectively. Time to calculate your budget. The calculation is simple. Simply set a budget limit for your metal investment. For example, if you have put aside $5,500 for metal investment, and you've chosen minted gold bar as your preferred metal investment, calculate the current buying price to your budget. Now it costs $1,293.20 per ounce. With a budget of $5,500, you can invest up to 4 ounces of minted gold bars. If you want to fully utilize your budget, you have the privilege to invest in silver metal as well with the remaining $327.20. Simple, isn't it? Not knowing which silver investment to make? Take a step back to Step I and decide. You could also choose to keep it. It's your decision to make. The final 2 steps for this investment vehicle are to ascertain your choice and look for it nearest you. Let us ascertain some of the possible scenarios for your choices. First off, you've identified your decision to choose gold. Why? Because you've learned that it contains valuable characteristics to improve your passive income in the future. You are certain that inflation is on the rise, and the only way to curb your financial instability is to invest in gold. During calculation, you have set aside a generous amount of budget for gold, $5,500. You've decided to invest in gold-minted bars. The market buying price gave you the luxury to purchase 4 gold-minted bars. Another scenario would be that you decided to invest in silver. You've identified that silver is the best way to help increase your passive income. Why? Because you've seen how silver manipulates a variety of industries over its demand, and that it has a depleting supply, and that stabilizes its rarity. It is rising at a tremendous rate compared to gold. During calculation, you realize that you need only a slight amount of budget for silver investments. At $1,000, you've decided to invest in silver cast bars. The market buying price allows you to buy up to 40 silver cast bars. Now that you have ascertained your decision based on Step I, C, and A, it's time to scout the place to buy them. Your last step is N. What you need to do is to locate the metal nearest you. Most of the physical metals mentioned in this vehicle are available both in land and online. Land market consists of jewelry shops, private mint shops, and banks. You will need to do a bit of scouting for the nearest place around the neighborhood. Remember, certain shops and banks may have differing market buying price because of their respective premiums. So long that it doesn't interrupt your initial budget, you are covered. Online market, on the other hand, consists of bullion dealers. If you are listed in their shopping list, you can buy the metals at any time. It's easier for you to buy online because of its instant services. However, online dealing is highly exposed to scams as well. So what are you waiting for? Go out there and buy that first metal of your choice. Finally, what lies in the future for you? Gold and silver. After all this, you must be wondering, gold and silver are considered long-term investments. So are you going to be holding on to your gold and silver forever? The answer is simply no. There will come a time where you need to sell them, but now is just not the time. So if you've already converted your fiat currencies to gold and silver, hold on to it. When a currency continues to devalue itself, the costs of goods and services will rise along with your precious metals. It's been like this in the past, and it will certainly resurface itself in the future. In this case, history shall repeat itself. When it does, that's when the worth of the gold and silver will be revalued and brought to the front line of your financial battlefield. What's important for your financial life is the continuous injection and supply of your passive income. But do bear in mind that ultimately it's not the commodities, the stocks, real estate, business investment, or gold and silver that will make you rich and financially free one day. But it is your knowledge over the investment you made, their background, their behavior, their patterns, their individual tricks of the trades, and most importantly, how you act upon it will accentuate your wealth. So remember, you are not to do what the investors tell you to do, but to do what the investors actually do themselves. That's why these steps are designed especially for you to do what the smart investors have been doing with gold and silver. As you can see, we've uncovered the 4 steps to invest in gold and silver. Step I, identifying your preferred metal. C, calculating your investment budget. A, ascertain your choices and budgets. And finally, N, places you can purchase your metals nearest you. The whole framework on gold and silver investment can be summed up into the acronym ICAN, and that reads, I can. It's easy to think that you want to start investing, but to act on it is what's stopping even the most excellent thinker. Do not let that be you. Just tell yourself, I can.